For those who are actually followers of the Indian markets and have some sort of attachment towards it, here's something that will make your day. Chris Wood of Jefferies, in his well-known Greed and Fear note, has mentioned that India is the best equity story in the world on a 10-year view, a full decade. Now that's enough to make your day, I guess, but then there is more that he has spoken about as well. Now first up, he talks about India's GDP, where he mentions that it is realistic to project a 7% real GDP growth and a 12 to 15% earnings growth going forward. Now if India is indeed the best equity story from a 10-year standpoint, it is only apt that its markets will do well. And Greed and Fear is projecting India's market capitalization to hit $10 trillion by the turn of the decade from $4.5 trillion that it is at currently. That's almost 2.5 times from current levels. That's another thumbs up. But Chris Wood is lamenting the fact that despite the general consensus emerging for India among many global investors, some of who have not even invested in the country, India's market does not command enough weightage in the global indices. Take a look at this. India's weightage in the MSCI AC World Index is at 1.8%. In comparison, the country has a weightage of nearly 29% in the Greed and Fear global long-only portfolio. Now, the extent of India's market doing well is evident from this table, which shows you that the rise in market capitalization of India's companies. The number of companies with over $1 billion market cap has nearly doubled over the last 5 years, and same is the case for the $5 billion and the $10 billion bucket, where the number of companies have doubled. So what is the biggest risk now in this market? The biggest risk is that there is no risk at all. And Wood is mentioning the same thing, that the biggest worry is how well the Indian market has done of late. The India long-only portfolio is up 75.5% in US dollar terms since March of 2023 in comparison to the 39.2% MSCI India gain. Now, what is the other area of concern? Of course, it is the broader markets and their valuations. The Nifty Mid-Cap Index is trading at a one-year forward earnings multiple of around 26 times, and compare that to the Nifty's 20.2 times. But they want to look at the valuations from the context of acceleration in growth in reaction to the pickup in the capex cycle. Another sector where Greed and Fear is focusing on is real estate. 19% of their India portfolio is in real estate stocks, and the India unit of Jefferies has been bullish on the real estate space for a while now, and Greed and Fear believes that this is the third year of the property upcycle. What is also in an uptrend is State Bank of India, India's largest lender, where Greed and Fear is increasing its weightage in the Asia ex-Japan long-only portfolio by 1 percentage point. And where will that come from? Of course, by trimming it in HDFC Bank, which has been an underperformer. So, the big takeaway, India is the best story for the next 10 years, 10 trillion in projected market cap by the end of the decade. If you are an Indian market watcher, there's nothing more you can ask for, but then there is always a greed for a little bit more, isn't it?